Okay, the recording has started and we're going to actually get started this morning. Now, I'm going to do something different this morning. We're going to be talking a lot about money management. The first thing, though, that I want to show you is this is the scanner window for the futures. What stands out at you this morning about the indices? Is there anything that stands out at anybody? It's all blue. What does that tell you? Everywhere you look is blue. What does it tell you? Right, you're trending up. Okay? And the next thing that I would want to pay attention to is there any values that are considered to be overbought? Okay, is there any high ADX values? All right, if you want to know what I'm talking about, look at the Canadian. The Canadian is at 80.96. What does that mean? It means that the Canadian, when measured against the US dollar, is overbought and there is divergence coming in at the moment. Okay? So the Canadian is overbought, but we don't see any of those conditions on the indices. Okay? In fact, on the indices right now, everything is actually going up, 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 up. Okay? Now, when you come over and you start looking at your charts, you look at the daily, okay, and it is at 71.87. That is considered to be overbought. Does that mean the market will drop today? No, it means be aware of the fact that this may be overbought, but there are no signs of this market going down at the moment. Does everybody understand that? There is no overhead resistance on the 1440. There is no overhead resistance on the 720. There is no overhead resistance on the 180. The only thing that I see that could potentially act as resistance is a zone that is at 4078.5. Everybody with me so far? So between here and here, is there anything in the way of a good trade? Right. There's nothing in the way of a good trade. Does that mean it cannot change? No, it could change on a dime. We all know that. Okay? The U.S. market could open and it would fall. We could have a market report and it would make it fall. But are there any signs at the moment that this market would fall? Absolutely none. Now, we do have a core durable goods at 8:30 this morning, and then at 10 o'clock we have the CB consumer confidence. Now, the CB consumer confidence and the core durable goods are expected to come in lower than the previous month. That's anticipated. It doesn't mean that it will. Does everybody understand that? Now, do you see any sellers in the market lining themselves up for short positions? I don't see it right now. Does everybody understand that? In fact, every time sellers have come back in to the market, the buyers have dominated the bar. You see that through the volume indicator. Okay? Now, does that arbitrarily mean you need to go long? No, you still need a setup. And the setup needs to be able to give you a reward that is at least double what your risk is on a future contract. Why? Can anybody tell me why? Because unless you have an extremely high winning percentage, you will lose money if you are not taking at least double your risk on the futures. Okay? It's what we call an inverse risk to reward ratio. Okay? Now, let me find one of my spreadsheets. Now, this is a spreadsheet that I do for futures. Okay, I don't use this on the binaries, I use it on futures. And we're going to explain the inputs first, okay? Clipper 1 would be 4 times your initial risk. Clipper 1 would be 2 times your initial risk. Clipper 4 is 4 times your initial risk. Okay, break even means you cover the cost of your trade. Your maximum risk in this case is set to 10. The minimum is 4. It tells you right here what your risk to reward ratio is. Now, just for giggles, we're going to put in a 1-to-1, okay? 1-to-1 is not an inverse. It just means that for every dollar you're risking, you are making $1 in profit, okay? We're going to do this at a standard 50-50, 50 wins, 50 losses. Everybody with me so far? Now, on futures, you also get what we call slippage. It means to go into the market, you might want to get in at 100, but actually you're going to get in at 101. And then when you want to exit, instead of getting out at 110, you're going to get out at 109. It's always going to go against you on slippage. Does everybody understand that? All right, and we're going to do this over 600 trades, totally randomized. Okay? They use risk to reward ratio. That's why we did it down. All right, so we're going to regenerate the trades. And it's going to do 600 trades, totally randomized. What happens? Do you make money on that? No, you typically lose about $33 per trade. It tells you that the average P&L per trade is negative $33.21. Okay, maybe it was just a fluke. Maybe we need to regenerate again. It still loses money. This is 1-to-1. Now, you can sit here and click this all day long and you are still going to lose money at a 50-50 rate. Okay? Why do I use 600? Because 600 is a really good sample size. To be really accurate, you would need 643 trades. Okay? It's going to do the same thing, guys. You're still going to lose money. You're doing 1-to-1. It's an inverse risk to reward ratio, okay? Now, some people call that expectancy. That's a fancy way of saying risk to reward ratio. What if I change this to 2? Okay? Now, that's the only thing I changed was the risk to reward ratio. I'm going to do 2 instead of 1 if I can learn how to type, okay? Now let's regenerate the trades. What did it do for you just by changing one factor? And this is just 50-50. That's standard probabilities. Yeah, and it looks really, really good, Jim. But when you regenerate that, because it is totally randomized, do you see how you would have to go through this drawdown? Notice that this is 273 trades. Do y'all notice that? Do you need me to make it bigger for you? This is trade 271, 286. It's just starting to come back. Do y'all see that? Now, out of all the traders in the room this morning, how many of you would sit through 271 negative trades? Right, nobody would. Nobody in this room would do it. And that's the reason all of you that bought the silver or the gold or the platinum package, there was a chapter in that book that I sent you that said I did a coin cost and I had to do it 200 times before the probabilities actually worked out. Okay? Most traders actually give up by this point right here if they're underwater. I mean, 20 negative trades, that's it. I don't want to do it no more. It don't work. But it did work, didn't it? If you stuck with it, it worked. If you wasn't changing things, it worked. But you had to get over here to 286 before it actually started working. Do y'all understand that? All right, let's regenerate again and see if it gets better or worse. This is totally randomized, okay? It doesn't matter about the trade, Jim. It does not matter at all. This is based on you have a 50-50 chance every time you go in the market. You're not taking any break-even trades. You knock that out, okay? So it's either you step in and you win or you step in and you lose. It's that simple. Okay? Now, in this one, you basically had to go through about 160 trades. Could you do that? Could anybody in the room do that? That's what we call drawdown. Do you understand drawdown now? Do you understand why we say you have to have a big enough account to withstand the drawdown? Because this, guys, this is your drawdown. This is what you have to be willing as a trader to go through. Now, by the time you get to about right here, if it went 2 ticks in your favor, you're ready to take a profit. All right? That gives you an inverse risk to reward ratio. So let's say that you do a 0.5, okay? So for every dollar you're risking, you're making 50 cents. Is everybody with me so far? And believe me, traders will do it. I've seen it. And if you think 1-to-1 was bad, how do you like that one? Yeah. Now, this is something that I've written about for, I know, at least the last 5 or 6 years, okay? Because, everybody wants to know, can I make money? Can I make money? Yeah, depending on how you manage your risk and how you manage your reward. Now, let me show you why I'm pointing this out this morning. There is a reason for this madness, okay? This is the article that I did in Stocks and Commodities, okay? And this is what's different with binaries. which is why I tell you to do your research on the binaries first. But I'm going to walk through this real slow with y'all so y'all understand what I'm doing here. Do you see here where it tells you profit percentage? And I want to make sure that y'all see this nice and clear. This is your stake, which is your risk. This is your profit percentage, and this is your payout. That is the way most of the binary options that pay on a percentage base, this is their screen, okay? Now, this is what it looks like when you enter the trade and then you actually complete the trade. What was the payout on that trade? $19.50. There's nowhere in this article that I say this is your profit, okay? This is the payout. What's the profit? Anybody want to tell me? You are risking $10 for what? To make $9.50. Well, these don't pay commissions, Mika. All right. That would be your P&L. So do you have an inverse risk to reward ratio? Yes. Because it is paying out 95% of what you're risking. Okay? So let's go back here and let's put in 0.95. Okay? What did it do over 643 trades? You lost money. Do y'all see that? I'm getting there, Jim. Give me a minute. Now, why do they do this? Okay? And this is what I don't say in the article. Okay? They do it because it's a marketing ploy. Oh, I'm making 95%. Yeah, it looks great. Okay? Now, down here, it says your net payouts. Okay? This is your stake. This is your percent payout. This is the number of trades. This is what they pay out. And this is what they show. Did it make money? No, because it's still an inverse risk to reward ratio. What did they include in the payout? What your stake was. It doesn't say this is your win-loss. It doesn't say this is your equity graph. It doesn't say this is your total winnings. Okay? It says total payout. And the binaries consider that a total payout. What makes a difference in trading binaries? Trading binaries, the only way that, in my opinion, you're going to be profitable if you have a 50-50 risk to reward ratio or 50-50 win to loss ratio, okay? Flexible exits. That's what makes a difference. Do y'all understand that? All right, let me show you. We do 50-50, okay? All right. Now, this is easy, guys. All right. These are your parameters. I didn't do 643 just because I was lazy and wanted to do 600, basically. It's not 43 trades are not going to make a difference in this. All right. You're going to have 300 winning trades, okay? Our profit target is 75% of the full risk. Do y'all understand that? So whatever the full risk is over here, you take 75% of that. That is your profit target. Y'all understand that? All right. you're going to take 250 losses at 50% of your initial loss. Does everybody understand that? So initially, when you go into the trade, you're risking $51. 50% of that is $25.50. If at any time per contract it goes against you $25.50, you exit the trade. Has everybody got that? But there's going to be times when you have to go to the bathroom or it just moves dramatically against you. In that case, I've allocated 50 trades that take a full loss. That's roughly about 17% of the losing trades. Does everybody understand that? Now, it's got to be totally random, okay? Because sometimes you're going to go in with $10 of risk, other times you're going to go in with $54. Now, I did keep the randomization, and I'll show it to you. It's a random number between 10 and 54. In other words, you can risk $10 or anywhere from $10 to $54 in that column. Excel randomizes it so I don't have to do it myself, okay, because I'm lazy there. All right. I did the same thing on the 50% loss, and I did the same thing on the full loss. Everybody understand that? All right. It still makes money. You don't have an inverse risk to reward ratio. Now, I'm just going to type random numbers, and I want y'all, as I type in these random numbers, I want y'all to look at this that I just highlighted, and I'm going to put it in purple with white so that it stands out at you. That number is going to change every time I type a number into the Excel spreadsheet. Let's see. 1. Is it a negative number? And it would show negative if it was. Is it a negative number? Is it negative? Is it negative? It doesn't matter what numbers I type in, guys. Do y'all see what I'm talking about? You don't get a negative effect here. And I mean, I could do this all day long. Do you see you're not getting negative numbers? Why? Because you're taking 75% of your initial risk as a profit, which means you're taking more on the winning side than you are on the losing side. Now, I realize nobody likes to take a loss, okay? Nobody likes to take a loss. I don't mind it. Why do I not mind taking a loss? Because I know mathematically I'm better off taking that loss. I've got it set where anytime I type a number, it will randomize these sheets again. That's all it means. Anytime I type a number into the spreadsheet, it means it randomizes these numbers, okay? So if I come over here, watch. Do you see how this is at 36? Because I've programmed this to randomize the numbers. Watch. Now it's at 34. It randomized all 300 trades again. And it does both the winners, the 50% losses, and the full losses. It just totally randomizes it. That's as close as you can get to mimicking what happens on the live edge of the market. Do y'all understand that? Because there is an element of randomization to it. So does everybody understand that? And this is based on 50-50, okay? Now, if you have 55 or 60 or 70% winning relationship, then you can do it all kinds of ways. okay? You can cover your risk and leave 2 contracts on. But most traders can't get this down pat, so there's no reason to move on to the other. Do y'all understand that? Because they're so I don't want to take a loss. Well, you know, you have that attitude until you realize you're better off taking that loss. No, it's trading 5 contracts, but it doesn't matter about the number of contracts, Jim. 1 contract will do the same thing. Does everybody understand that? All right. Now that we understand that, and we know that we anticipated the market to go up today because everything was blue, and I'm a new trader and I don't know how to trade, so I just said, hey, everything's blue. See, everything is blue on the NASDAQ, blue, 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 blue. So I'm just going to go long. Okay? So I did in the binaries, in the simulator. Okay? I did not show my live account in this room. You don't pay me enough. Okay? So I chose the 40.72 and the 40.76. I had it $48.53. Do y'all see that? That was my risk. So I got a little spreadsheet. This is my little spreadsheet, and it says, okay, if I entered at $48, my maximum loss is 24. My profit target is 84. That's what you see right here. Okay? I entered with 2 contracts, and that was actually by mistake, but I put it in here. So if this number gets to 48, I know I have to exit. Okay? So if I look at my $48 right here, if I see this number right here get to 48, then I must exit. Does everybody understand that? That's what this is telling me. All right, on the $53 one, if this number gets to 26.50, I have to exit. Okay? Now, here it tells me my profit target is 92.75. Well, it doesn't have that number, so I put in 93. Do y'all see that? Now, will you always get exactly this exit? No, that's the reason we did the 50 trades at full loss. Okay? Yes, this is recorded. I actually recorded it this morning. Now, this is not using any skills whatsoever. Do you understand? No trading skills whatsoever. What about the losses, Bonnie? I didn't understand your question there. Now, if, and I'm going to pull this off because I've got limited screen here, okay, if, and this is what I tell y'all a lot of times, if I have to exit this position, I have to also come down here and correlate it to my working orders because the working orders already have my profit targets in. Okay? Now, these are not 1 hour binaries. These are all days. Got all day. As long as it doesn't go against me for my full loss, I'm good to go. Does everybody understand? Now, the only thing I have to do, and I captured this for everybody, I had a wrong number in there. Me and my typos, I swear. Okay. So just to make sure I stay on track, because I'm new and I get distracted very, very easily, okay? If this gets to 26.50, I have to exit. If this gets to 48, I have to exit. Why? Because it would give me an inverse risk to reward ratio. Now, we have an 8:30 market report this morning, okay? So could I accept a full loss on this because the market moved suddenly against me? Yes. That's the reason I allocated 17% of the trades as full losses. Do y'all understand that? Because sometimes it's going to happen. There's nothing you're going to do that will prevent it. It's just part of trading. Okay? And believe me, I have taken a full loss sometimes. This is what makes Nadex different. The ability to say, okay, I got in this at $48, but I'm not going to let that go $48 per contract against me. This is what skews your risk to reward in your favor, or it skews the expectancy in your favor. Do y'all understand that now? Now, if you're sitting here and you're letting this run its course, okay, and go all the way against you, you've got an inverse risk to reward ratio. As if you're taking trades that are greater than 50, you have an inverse risk to reward ratio, okay? Do y'all understand that now? But how many of you have heard me say I'm a bargain shopper? To me, that's bargain shopping. Uh, 45%. As long as you had a 50-50 risk to reward ratio, you could do that, Jim. And, you know, when we go back to the Excel spreadsheet, okay, let me find it. When you come back to the Excel spreadsheet, okay, and you're looking at some of these like $12 here, okay, on the $12 one, okay, I would probably go ahead and, allow that to run the $12. Why would I do that? Because that one's automatically skewed in my favor. There's a $100 potential payout, right? 100 minus 12 is what? It's $88. Do y'all understand that? Yeah, and the only reason, Jim, is, okay, this would have to move at 21. I know this is out of the money, okay? But if there is a market report that puts it in the money, what's the risk to reward on that? I was looking for my calculator, but I think my dog ate it. All right, so if I made $88 with $12, that gives me a 7.33, okay? So that's a huge risk to reward opportunity if my indicators are telling me, hey, price is likely to go there. How many of you were in the room last week when we were talking about the euro? Okay, there was nothing in the way of a good trade on the euro. Does anybody remember that conversation? And bear with me because I've just got to move screens around so I can get to it. All right. This was last Thursday, which was the 21st. This is where we were at, and there was a zone up here at 3,300. Everybody remember that? There was nothing in the way of a good trade. And do you remember I said I would go out of the money on that one around 32.80? Do y'all remember that one? That was out of the money, and I think the risk was... Mika, didn't me and you talk about this one? No, that was one I did yesterday. I think the risk was somewhere around $20 to $30. And knowing the indicators as I do, I said, yeah, I'm going to let that ride because it's going to make it. And it did. And it gave me a risk to reward of about 1 to 3. I'm good with that. Do y'all understand that? But it's because I know how to read the indicators and I know how to read my charts. Do traders that are beginning to trade know how to do that? No. They don't have my years of experience, and I'm not in any way trying to toot my own horn, okay? But I did spend a lot of time to learn this. This wasn't something that came to me overnight either. And believe me, I've probably cried more than y'all have, okay? And no, I probably didn't lose as much as some people have, but I've lost, okay? That's all I'm saying, I've lost. I've lost more in a day than what some people's lost in 2 months, but that's beside the point. Does everybody understand this now? And when you look at a chart, and this is something I don't really understand with traders, but I know I used to do it, so I know it's done. All right, for example, let's say that we entered this one at 32.12. Okay, where's the stop? This is the first thing. Everybody that knows me knows I say this. Where's your stop? Okay? Because if your stop is way up here at 3,300, okay, exactly where is your profit target? Okay? Because that's a lot of risk. And this has got to move a lot for you to get a 1 to 2 risk to reward ratio. Do y'all understand that? But what if you tell me your stop is up here, okay, that's your red line, that's your stop, and your profit target is right here. And I take, oh, yeah, the risk to reward is 1 to 2. Are you going to believe that? It ain't going to work. And looking at that should tell you that ain't going to work. But it is up to you as a trader, as a business owner that owns your own business, to look at it and do the mathematics. Because they are not going to do it for you. I guarantee you they won't. If you're expecting them to be truthful and you're expecting them to be honest, then you have set your expectations way too high. Even with me. I put it in your face. Look at it. You tell me. Why do you think I enter at an ATR? Because it's the lowest point of risk. Why does that concern you? Because you have to be able to double it to come out ahead of the game. I'm not talking about experienced traders. I'm talking about new traders. Okay? If you're doing 50-50, you're doing good. Okay? Because you're trying to learn. Does everybody understand that? Am I speaking a foreign language to you? Because if I am, tell me, and I can say it in another language that you'll understand. And this is exactly why, I tell you the only binary option that I recommend is who? Nadex. Well, you have to be a U.S. citizen. That's true. I can't help that, guys. It's not my rules. It's not my regulations. It's just fact. Okay? I can't change that. Now, there are some, and I haven't researched all of them, okay? So I don't know every binary option broker out there. I don't claim to. But there are some that are offshore that do allow you to modify your exits. That's the key to it, guys. Now, what about the spreads? Okay? How many of you have heard me say the spreads are an excellent opportunity for risk to reward trading when you anticipate the market to move in your direction? Now, if you go in and enter a spread and there's no market movement, then you can't make money. Do y'all understand that? Well, you can, but it's harder to make money. Okay? But if you're dealing with something that has like a $5 risk and you've at least got the potential to double that, hey, you've done good. And that's the reason when I'm looking at spreads, I really bargain shop. Okay? All right, let me pause just a minute because I need to go get some coffee, and then I'll be right back, okay? Okay, I'm back. Can everybody still hear me? So, if you're looking, and let's just do an example of this on the spreads, okay? So that y'all understand my mentality for bargain shopping, okay? So let's go to the US Tech 100. We're going to give it all day. We'll see what they have available, okay? Now, the first question, where is price? Well, price is at $40.69. And we think it's going to go up, right? So we have one here that says $40.70, okay? It's going to cost me 8 points, the difference between $40.70 and $40.78, to get into this trade. When I click on this, it tells me my risk is $8, and if it moves 80 points, which we have not had a day that it did, oops, sorry, now do you see it? All right. We have not had a day where the NASDAQ moved 80 points in a while, okay? But if it did, my profit would be 72. I'm a bargain shopper, okay? If my risk is $8, then I need at least $16, which means a 16-point move. Is that realistic for the NASDAQ on any given day? Yes. It is. Why did I choose 16? Because that is double my risk. Does everybody understand that? In order to double my risk, which is $8, it will have to move 16 points in my direction. Right? Because that would give me $16. That would be double my risk. Now, I could get a little fancier and say, okay, I'm going to do 3 contracts. Okay? So, then if 2 contracts goes to $48, I'll let the other one ride, just on the off chance, okay, just on the off chance that it does move 80 points. Do y'all understand that? I could do that because I've already covered all of the risks. There's no way I would lose money on it. And I would still be profitable at the end of the day. Yeah, in that case, it would have to move 24 points, okay? Which, I mean, the NASDAQ could move 24 points. Does everybody understand that? And then all you do is place your order, click close, and you're in with 3 contracts, okay? Now, is this one that I'm going to say, okay, now if it goes 50% against me, I'm going to go out? No, I'm not. Because I already got a bargain deal on that one. I already know if this moves up 24 points, I've locked in my risk. Okay? Jim, you use TradeStation, right? All right. I have a bar range workspace in TradeStation that tells you. And I also have articles that tell you too. But the other way is just look at your daily chart. high to low, okay? Yesterday the high was 40.78. The low was 40.56. Basically a 20-point move. Now, I do an average, okay? The other way that you can do that, I use typically 254 trading days. I can't do that in multi-chart, so I'll show you what I do. We're going to put just the ATR, just a standard ATR, nothing amazing about it, okay? Well, it is amazing, but this is the average true range. And we're going to set this to 30, okay? So the average true range for the last 30 days is 39.77 points. So, again, going back to our scenario on the spread, is 8 points per contract. Well, not 8. 8 was the risk per contract. Is 16 points reasonable? Yeah. Yeah, but that's on 3 contracts, Jim. It was 8 per contract. We opted to do 3 because we could take all risk off with profit on 2 contracts and let the other one run just in case it moves 80 points in our direction. Does everybody understand that? Not really, because it actually will work out in your favor when you exit. Okay? Because do you see how right now, if I sold it, it's 40.77? No, it actually works out. So there's 2-point difference here. Now it's a point difference. I'm looking for the spread that is closest to the floor or the ceiling. This is not going to be exactly the same price as this is over here, but it works in your favor. You worry about it on entry, but then when you exit, it still comes out in your favor as well. Do you understand that, Jim? That threw me off at first, too. And this is also more of a spread as well, just because it's a daily that is bigger. If you go into like 8 to 10 a.m., see, this is only 4. Okay? So I say, oh, I think it's going to jump in my favor. You can go in that one as well. On this one, you're risking $4 to potentially make 8. Okay? Do you understand that? Now, because we have a bias to the long side, and this is also what's different, okay? That is exactly right. I've done that too. Now, this is just one market, and we have 4 different trades, okay? I love that. As an experienced trader, I love that because I can get so many, trade entries off of one setup. It's like, oh yeah, I'm excited, okay? But for a beginning trader, I would not want to do that because that's also 4 trades that could go against you. Do y'all understand that? And you know, a beginning trader, one at a time is fine, okay? You need to build up skill, okay? All right, Chris, you said, so when your risk is below somewhere around 12 or below, you would not be concerned to let it go totally against you, always considering that your full profit potential exceeds double your risk. Pretty much, I do, from my standpoint, I want to see something on the higher time frame that says this move's coming. Okay, Chris? And the reason that I say that is because if I don't, somebody in the room, okay, that I don't know or anything, would go out here and they would look at a binary. And again, let's just go in the daily binary, and they would look at it and say, well, I could get this one for $11.50, okay? Because they would only look at this number and, well, if it moves up there, I've made, you know, what, 80 bucks? Right? What's the chances of it getting to 41.04 today? How big of a move is that? That's about a 30-point move straight up, isn't it? Do y'all understand that? Is there anything on my charts telling me it will go to 41.04? Nothing. Nothing. Then you're just saying, oh, well, I want this just because it's cheap. Okay? I don't want it just because it's cheap. I want it because there is something, an indicator or price pattern or whatever that's in my trading plan that says this is likely to go to this point. Okay? Then I'm going to bargain shop, not before. Taking the losses is probably the hardest part of trading. And you know, I've written a lot of articles on what it does to you mentally. Okay? And I'll tell you, it's not a pretty picture. And I've got experienced traders in this room, and I've got inexperienced traders in this room. And even the most experienced traders will tell you it is one of the hardest things to do to take a loss. Why? Ask yourself, why is it so hard for me to take a loss? Most of the time, it is because you want to be right. Okay? Nobody likes losing money, but when you really get to the root of it, you want to be right. The market's always in control. The market is God. Okay? Oh, I readily admit that mine are sometimes, but only sometimes. Sometimes they're actually pretty smart, but sometimes they're not. Yeah, and sometimes, you know, I've got 10, 15 years of experience. Excuse me. Okay, I think I'm back, and I think he quit barking. All right. Now, why have I encouraged new traders to trade Nadex? Okay? Do you see over here on the 3-minute chart, if you had entered on this ATR, you were stopped out? Jim, that's funny. All right. You have not been stopped out on the binary. Okay? Do y'all see that? Remember, on the binary, the original risk was $26.50 on the 53, and it has not achieved that. And on the $48, this number has to get to 48, which it has not done. Now, would you like to know what this may be that causes you a lot of losses? It's what we call noise. Okay? In a 3-minute has a lot of noise. Okay? Do you see where it's at the ATR here? Okay? I would wait and say, okay, is this ATR going to hold price up? The 12-minute has less noise than this one down here. Do y'all understand that? Now, if I see that they're going to flip this ATR, I would go ahead and exit, in which case I would have less than the 50% risk that I was willing to lose. That's experience. Do y'all understand that? Because I know I could always re-enter if something identified, okay, you need to re-enter this because it probably is going to go up. Does everybody understand that so far? If the 12-minute does not hold price up, okay, you have a 12-minute and you have a 180-minute that's probably holding price up at the moment. This is my experience, okay? This is holding price up, this is holding price up, okay? So if it flips this ATR, okay, then I would exit early, okay? I wouldn't even take 50% of my initial risk on that loss. Do y'all understand that? George, can we do a little bit later because I want to actually stick with these through the market opening? Okay. This was totally unexpected, but I do want to hold these through the market opening to see what happens. Okay? Just so that y'all can see it as a live example. Remember, this is my simulator. This is not my live account. Okay? I don't show my live account. I have good reasons for not doing that. All right. Now, we're going to move this off slightly over here. And we're just going to sit here and watch this because to me it's 50-50. It could go either way. Everybody understand that? Is it about being right or wrong? Nope. It's about whether or not the market decides to move up or not. That's it. And just to make sure that everybody knows that these are the numbers that we're looking at, okay? And I'm sorry, but I'm trying to get all of these on the screen so that everybody sees everything, and I've got to work off of one screen here. Okay? So, if you look at 53, compare it to this 53, if this value gets to 2650, we will exit. At 48, the number right here that's at 48, okay? If this number gets to 48, we will exit. Everybody understand that? Right, it's 24 times 2. Our initial risk was $48 per contract, but we're only going to risk 50% of that. For me, it's always been real important to work the numbers out for the beginning trader. Only because experienced traders, I mean, we can do some really fancy stuff, okay? Because we know our winning percentages are higher, okay? But a beginning trader, they don't have that advantage, okay? And that's the reason, for me, it always has to work out in your favor with a 50-50 win-loss ratio. Because if you do enough trades, if you're either taking a win or you're taking a loss, probabilities say that you've got a 50% chance of doing it to the winning side, 50% to the losing side. Again, you have to go through a lot of trades sometimes to get there. Why did it get taken out, Jim? Well, it's got to take out the congestion dot too, but why did it take out the 3-minute ATR? Did you really think the 3-minute was going to override a 12 and a 180? 3-minute is noisy. That's the reason. How many times have I told y'all, look at the 1440, the 720, the 180, and the 45. And if you don't see your trend direction, if you don't see your trade direction, don't look down. Don't go to a 3-minute. A 3-minute doesn't rule the market because 3-minute has a lot of noise on it. That's why I tell you not to do that. And this is, there's a lot of cliches in trading, but very few people actually understand what the cliches mean, okay? This is showing you what the cliches mean. Do y'all understand that? Okay, Dave said, thanks, got my 2-to-1 on Nadex 94 strike crude this morning. Small, but you're dead on in the analogy of what it takes to be successful in trading. You should be teaching a college course. Love the spreadsheet. Forget about trading. The spreadsheet is what you have to understand even to begin trading. And Dave, you're right, and that's what very few traders do. And to me, the only thing that saved me, and I've said this many times in trading, there's only two things that ever saved me in my trading. One is like my mom calls me a pit bull, okay? Because once I sink my teeth into it, I won't let go, okay? So that actually worked to my favor because I was not going to fail at trading. I just wasn't going to do it. I've never failed at anything in my life. I've always been an overachiever, okay? That's why I had 6 kids. You know, 2's just not enough. I have to overdo it and have 6, okay? All right. The other thing that saved me is I'm a very logical person, okay? And that means that when I set around to trading, I want to look at the logic and put the math to it and say, okay, will this work out mathematically? Because people will lie, okay? Trust nobody. In this industry, it's a joke, but it's pretty much what I believe. Make it work out on your spreadsheet. And the only way to do that, because you've got so many multiples in trading, you know, you're not always going to risk 10 ticks. You're not always going to do this. You're not always going to do that. Randomize it. Okay? When you randomize it, there's no emotions attached to it. There's no, well, I wouldn't take that trade. Okay? It's totally random. And if it can work out in a randomized setting, then typically if you stick with it, it will work out for you. But remember, sometimes it takes 254 trades to work out in your favor. I showed you that this morning. And say, I didn't really believe in probabilities that much until I did the coin exercise. And I literally did that over a weekend, just flip a coin 200 times and recorded every one of them. Then I started believing in probabilities. It made sense to me. It was logic, okay? There's some basis here, because otherwise it wouldn't have worked out. I could have screwed it up. Oh, which one? Because I've shown quite a few this morning. This one, Jim, or, yeah, send me an email and I'll send it to you. The short entry, this is one of the reasons I did it. Let's say that we entered, I don't know, at 64, okay? This one will tell you what your profit target is, which is 37, because, you know, when you sell the Nadex binary, then you have to put in a profit target that is below price. So this was just an easy way for me to do that, which is why I created it. But yeah, if you send me, if you're a client and you send me an email asking for this, yeah, I'll send it to you. It's just a really easy way for me to say, okay, this is what the target should be, this is what the stop should be. And this is where you begin, okay? And I've got some traders in this room that can get a lot more fancier. I can get a lot fancier, okay? But when you're dealing 50-50 as a beginner, and, you know, let's define beginner. Beginner to me doesn't mean this is your first day of trading. Beginner to me means that you're not making money consistently. It's because you're still working it out in your head, Jim. And this is what happens to most traders. You know, if we bring back the randomized trades, okay, and again, instead of 95, let's go ahead and put 2 in there because we already know that's what it should be. Let's regenerate it. All right. Now, in this case, right here, most traders wouldn't have had trouble staying with this. Do y'all see that? You know, most people right in here, they would have had trouble. They would have said, well, it worked great, now it's not working, so I'm moving on. And they missed that. Well, thank you, Dave. All right, this one, all right, I would say until right about $200 trades, you may not have stayed with that at all. Because, I mean, this is what we consider churning. You go up 1,000, down 1,000, up 1,000, down 1,000, up 1,000, down 1,000. Okay? That's what we refer to as churning. Okay? You could start in any area of this, guys. You know, most traders want the first one. It just goes straight up, easy money. Okay? It's not the way it happens, though. You know, this one wouldn't be hard to stay with. Yeah, you lose a little bit. Really, your biggest drawdown is over here. There are some traders that even though it's made them money when it comes over here, they're going to stop. Oh, it don't work no more. Market changed. No, if you would have stuck with it, you would have made new highs, just like the market does. Do y'all understand that? That's the way I see it anyway. That's what I'll put it. Regenerate it again, okay? This took 76 trades before you really even started to move up. And then you gave it all back. And then you slowly started working its way back up. You would not have been able to withstand from 400 all the way back here. This 400 trades, do you know what that equates with? You went out and bought 5 sets of indicators. That's what it means. That's what it equates to. Because you think it's the indicators. Okay? It's not. All right. Let's change this to 51%. Let's regenerate the trades now. All right, well, you know, nobody would have trouble staying with that. If they did, they need to choose another career because that's actually a beautiful equity graph. Okay, let's do it again because not everything's so perfect all the time. Well, you had to sit through about 60 losses to begin with before you started making money. Do y'all see that? All right, let's do it again. Well, you wouldn't have trouble sitting through this. I mean, you had no major losses on that. Not as far as equity goes. Oh, God. This just doesn't work. That's what you were thinking up until about trade number 300. How many of you would have stuck with that? But it worked if you gave it time. Yes, I am Donald. I'm recording today's session. So when you come to me and say, it didn't work, yeah, it did, if you just stayed with it, okay? Do y'all see that? Now, if you really want to change the futures side of it, I think, let's do this at 45. Let's do this at 5. So we're going for Clipper 2 5% of the time, which is not much. Okay? Do you see how it changed it dramatically? Even your drawdowns were not that severe. Do y'all see that? It would be easier to stay with if you just changed into Clipper 2 5% of the time. So let's put that into numbers, okay? 643 times, well, no. Actually, and then we would do 321.5 times 0.05. 16 trades out of 321 trades would need Clipper 2. About. I probably did that wrong because I did that divided by 5. Oh yeah, that's right. They are on the website. Let me find where they're at because I went through all of the markets. We have to keep track because we want to make sure we don't have no losses here, okay? Not full losses. Let's see. The ones on the market, Dave? No, send me an email, Dave, and I'll send them to you. I think I'm going to do another article on risk to reward. Yeah, send me an email, Dave. I'm going to do another article on risk to reward because most traders just, they don't get it. Well, not necessarily, okay? The goal would be to change the winning percentage better than 50-50 by learning to read better the charts and being able to have a certain percentage of Clipper 2 trades. It depends on whether you are trading futures or binaries, number one. But also number two, when you first start trading and you're trying to become consistent in the market, Chris, your objective needs to be, look, I'm only going to be right half of the time. I needed to be dedicated to this methodology. I need to understand it. I know what my trades are. I know how to identify my setup, and you only obey those rules. And you obey your money management. When you get that down pat, okay, and that's going to take you a year to 2 years to get down pat, I'm going to tell you that right now, then you say, okay, I've got this down pat, now let's move up and, you know, let's try to get more reward for our risk. Do you understand, Chris? And to me, this makes it easier, okay? Because instead of worrying about losing your entire account, you say, okay, if this number gets to 2650, I will exit, okay? You're actually able to focus over here, okay? Yeah, some of you, oh my God, it's pink bars, okay? You got to take the emotion out, okay? We've already limited the risk maximum, okay? We're not going to blow our account. It is absolutely a profitable system if the winners are bigger than the losers. 40% are profitable, but a winner is twice as big as a loser. Is a profitable business correct? At 1 to 2, let's look at it, okay? Let's just go in and say 40, okay? And we'll put this at 0. And we're at 1 to 2 risk to reward ratio. Regenerate the trades. That's 40%. You wouldn't be able to do it. Now, if you went to 3, I believe it's 3 is the magical number there, Dave. See, that's what doing a 3 does. So if you're at 40%, you have to get $3 of gain for every dollar of risk. You might be able to do it with 2.5. But now this is adding in slippage, Dave, and it's also adding in the $5 commission for the futures because this is designed for futures. Okay? You may be able to do it with 2.5. I'm not sure. I had never tried 2.5. There's one with 2.5. It is possible. You're going to have some luck in there. You know, this one, it started off great, then you went through a drawdown. And that's what this is. It's drawdown, and most traders don't understand what drawdown is. Okay, this one you just kind of churn up until about trade 400. And Dave, you know as well as I do, that would be hard to sit through. So, you know, what I try to do is get it where it's a little bit easier to sit through. Okay? This would be easier to do. This would be easier to do. This one, you kind of churn up until about 360. I mean, you're not underwater completely, but until about 360, you know, you have a churning effect. So that's a little bit harder to sit through. But again, this is taking everything off, you know, at $3 of gain for $1 of risk, and it's calculating in slippage in your commissions. Okay? So let's go over and see if we got stopped out yet. As you can see, we're not stopped out. We're just we're just kind of sitting here. And, you know, you're panicking over these magenta bars. Was there any reason to panic on this side? No. Do y'all understand that now? Do you understand now why I recommend Nadex? How many of you would have been emotional because at the U.S. market session open you were $14 down? If you can't make money on this side, you're not going to make it on the futures, okay? That's just as bad as blunt as you can get. And the reason is you have got to do money management. It's an easy way to learn it without spending a lot of money on the educational part of it. When we traded options, now, for those of you that don't know, Dave is, let me get this right, Dave, you're a floor options trader, correct? Okay. He said yes, for those of you that want to know. Now, what he said is, when we traded options, 3/4 of the year was made in 1 or 2 months. Not much different than your chart. 400 trades break even, free look. Then you have the profitable run for the year. I have seen that on an annual basis for 20 years. 80% of our time was churning, but hey, when the sun shines, it makes hay. I love that. And that is the way, you know, even in this is the same thing that, you know, Wyckoff tried to teach people back in the 1920s, okay? Everybody thinks, oh, you're a great trader, you never lose money. I have lost money. I may lose money this week, okay? But at the end of the month, normally I am positive. Or I'm at break even. Do y'all understand that? And I'm really, really pretty good. But I still have drawdowns. And sometimes I just decide the market's going to go a certain way, and damn it all to hell, it better go that way because that's where my trade's going. Okay? Because I'm human and I do make mistakes as well. But my saving grace is the fact that I'm always looking at risk. Again, I want y'all to notice the noise. It's gone from red to blue. Now it's going back to red. Have we been stopped out over here yet? Has it reached these goals yet? Or these risk levels? No. It's almost there. Have a nice day, Dave. I'm trying to focus so that if it does hit $48, I can exit. Now, what do I need to do? I need to cancel this one at 4076, okay? How do I know that's the one I cancel? Because this one that's still in is 4072, so I know this is the one I need to cancel. Delete remainder, close. Now this needs to get to 2650. Has it got there yet? No, I'm still in it. There's the original. See, it's 2650. That's what we're waiting on. And you may ask, well, why don't you just go ahead and exit? You lost on the other one, okay? Because you're trying to follow rules, that's why. Otherwise, you're just trading your emotions. Do y'all understand that? You're not consistent yet. This is what makes you consistent, being able to follow the rule set. We already know it will work out in our favor, correct? We already proved that mathematically, okay? So we're trying to follow the rules. We're trying to become disciplined traders. It's one of the hardest things that you will ever attempt in your life. Take it from me, I know. If you can't get these basics down, you can't move to the next level in your trading. How well do I follow my rules? Actually, I'm pretty good at following the rules. I'm very, very structured. And that was very hard for me to learn because I'm ADD, Dan. But that's why I do the flow charts and stuff, because it's easier for me to keep on track. But that's not to say that I won't have a week that just totally blows it, especially for females. You know, a certain week out of the month we just get real emotional. And that came out actually in my trading journal. Of all places for that to come out, it was in my trading journal. But knowing that actually helps you prevent that from happening again. Yeah, it was a pattern that came out in the trading journal. That's the reason. Now, someone asked me the other day, I was on the phone call, and they said, do you still document every single one of your trades? No, I don't. But, and I say that with a caveat, if I notice that I'm taking trades that are against my trading plan, I go right back to using a journal, because my mind's not right in the right place. It's the best way for me to put it. In other words, I lost the structure in my trading. And I'm very prone to that when I come back off of vacation. That's the reason even when I go on vacation, typically I'm looking at the markets. I might not be trading the markets, but I'm looking at the markets. Because when I come back, if I don't, for example, when my daughter had a baby July 11th, When I came back, I didn't trade the first week because I had to get back into my trader mentality. But I mean, really, that's just any job will do that to you as well. Let's say you were a lawyer. If you go on vacation for 2 weeks, okay, you have to come back. You have to refresh. Okay, these are my cases. This is what I did on these cases. A lot of times the lawyer will call in the paralegal and say, okay, where are we on XYZ? Yep, it looks like it's trying to hold them. And this is where a lot of people say, oh, they're running stops. Do you know what you do when you think that way? Instead of having your stop here on the future, you'll move it. Or you'll just delete it altogether because they're running stops this morning, guys. That's the way you blow an account, too. That's the reason you don't hear me talk about stuff like that. You become a paranoid schizophrenic trader. We were stopped out on one. If the trade setup come back in, yeah, I would. The binary book that I'm writing, Jim, actually goes through, you have a maximum amount that you can lose per day. And you have a maximum amount that you can actually increase your account per day. And then you step away because your mentality, your trader's mentality will become skewed in either direction, and you don't want that either. That's the reason so much of it is about trader mentality. Yeah, it's trying to hold, but we just have to wait and see. Make sure the scanner is set to the same session template that you have the chart on, Keith. I do think the scanner updates the values quicker than the chart does. How many days back do you have loaded? That would be the other question. Which chart is it, Keith? There can be slight variations. All right, let me look at crude real quick. ADX is at 62 here. It's 60 on the scanner. So to me, that's not enough to make me concerned about it. Over here, we've got right about 63. It's got 61 here. That's a 2-point variation. Not enough to concern me. Over here, we have right at 45. Here we have 44. You know, that doesn't bother me. Okay. If you're seeing, you know, huge numbers, you know, 10, 20 point different, that would bother me. But, you know, not with it being, you know, under, I would say under 5 wouldn't bother me. Let me get all of our windows back up real quick so we can keep up with it. Because I really want to kind of see this through, see what they do at the 10 o'clock market report, because I think it's an excellent learning opportunity for y'all and what discipline in trading really means. This is the portion that most traders do not get right from get-go. From the start, they don't get this part right. And you're not going to get the other part right when you can't even get this right, because this is the first step. And it's the hardest. So Well, you do have to be able to trade to get the data in order to project out, Dan. I would agree with you. But if we're looking strictly at probabilities, and if trading is really all about probabilities, okay, like Mark Douglas says it is, then you need to have the discipline to take the trade, stay in the trade until either your risk is violated or your reward is gained, okay? Because this is the discipline part of it. Notice I'm not jumping out. Oh my God, there's the volume divergence. I got to jump out real quick. Yeah, I'm not doing that. I've already predefined what my maximum loss is. I've also predefined what I would take as, the 50% of the risk. This really has not done the 2650. Do y'all see that? It was updating. So a lot of times when you get the dash, that's your maximum risk. I know it was updating because I know it was nowhere near that risk amount. Do y'all understand that too? Because you've heard me say when you get the dash, that's it. You've lost the full risk amount. If your risk, and it was in this case, it was around $10, and then you get the dash, don't panic. It just means that it's probably updating, especially for me, because I'm projecting my screens out, okay? Now, the market report should be coming out, if it's not out already. Let's see. Open new window. Okay, the CB consumer confidence came in at 92.4. They projected 89.1. Previous month was 90.9. And the durable goods actually came in at negative -0.8. Last month was 1.9. That was at 8:30. Yeah, it came in very high. One of the reasons that I encourage you to stick with this until you get to 26.5 if you are a new trader is because if you're willing to come out of this early because of risk, you will also come out early because of profits. Do y'all understand that? This is about learning discipline in your trading, learning to go with the money management aspect of it, learning to actually abide by what you already have proven to be a fact. And that is, if your gain is more than your loss, if you will stick with it, you will make money. Yeah, every trader does, Ed. And this is why, we're doing discipline here. We're not doing anything else. We're doing discipline. Totally different. It's one of the most basic skills that you need as a trader. But that means I have to take a loss. Yeah, That's part of trading, sorry. There's nothing we can do to change that. And until you get the discipline, you can't progress on and say, well, I'm reading the charts. You can't read the charts because you don't have discipline yet. Discipline is number one. And I haven't done one of these classes in a long time, so it was time to have a class like this, I guess. Oh, I'll tell you right now, sometimes you take so many losses that, shit, man, you get $1 in your favor and you are ready to come out of it just to say, I finally won. Okay? I know. I've been there. Some of the stuff I used to do would make anybody laugh. You're just so glad to see green. You'll take anything. It doesn't matter. It's green. Yeah, just $10 more. Come on, please, please. Until you get this part of it down pat and you can do that, you know, you really can't focus just on reading charts and making decisions based on charts. Down 200, just $10 more. Yeah, I've been there. I have made such stupid mistakes in my trading when I was first learning. I don't know how I got out of bed in the morning. I really don't. How could I have been that stupid? And sometimes I was listening to other people. You know, just basing my trading decisions on where they told me my stop needed to be. That comes from the cliches, too. Let me pause my screen real quick. Okay, now I've got it back on. I had to look at an email. Now, if it gets to 26.50, we have to exit. Yeah, rules are made to be broken. Not in trading, they're not. That's the gunslinger mentality, Dan. And I mean, if you're going to do that, and sometimes even I have a tendency to do that, rules are making to be broken, I can call this market bottom, okay? Nadex is much kinder to you than the futures would be. All right. Remember this morning we started out looking at the Canadian, and I said the Canadian was overbought, and I know that it's going down right now because you've got an ADX is at 73. You know, the binaries would be better for you to call that market bottom because you could actually get in with a very low risk trade. Much, much kinder to you on that side. This is the one right here, 2650, that we're waiting to exit. It has not got to 2650 yet. That's the one that we're waiting on. It would be, Dan, but it's not an option. And I mean, the way Nadex sees it is you paid everything up front. They want you to be comfortable with that risk before you go in that trade. Which, to me, again, that promotes a more logical way of thinking. The other thing to notice, remember we entered this, well, I entered this, it tells you, I did it right before the trading room started at 7:49. It tells you that right here. Do y'all see that? And it is now 10:15. Okay. So we have been in this trade for a very, very long time. What does that allow you as a trader to do? I mean, I have all this on one screen for y'all's benefits. Yeah, watch the charts. And then you start noticing patterns that are occurring, okay? While you're developing discipline, are y'all listening? While you're developing discipline, you're learning patterns on the charts. No, you can't second guess because you have to be dedicated to this, right? So there's no second guessing because you already know you cannot come out unless this touches 2650. That's the discipline part, right, Ed? So you can't second guess. But it gives you 2 hours to really look at your charts, okay? And you start studying them and you start recognizing, there might be some patterns there that Gail's been talking about that I never saw before. Oh, that's what she's talking about. I didn't realize that. And then you start having your aha moments. How long will I watch trades for? I've watched trades for a long time, depending on which time frame I'm trading. I mean, if I'm doing a 45-minute chart, Jim, I typically watch it all day, sometimes into the night. Usually that's when I'm writing articles or blogs or something. I'm a little obsessed over trading, I know that. I have an office dedicated to trading. I have a laptop in my living room that I can trade from while I'm watching TV. And I have another one in my bedroom. Okay? I can see the markets from anywhere I'm at. I love trading. Yeah, I do multitasking a lot. That comes from the ADD, though. Oh, I know I'm a tradeaholic. It's Traders Anonymous, I guess. And again, the only thing that saves me is the discipline that I have to obey the rules. And when I see that I'm lacking discipline, you can believe I will take a step back. And there is 1 week out of the month. It's really challenging for me. I can give back all my profits in 1 week because my hormones are raging. And the only reason I found that tidbit of information out because the male world is dominated by, the trading world is dominated by males. And the only reason I found that out is because I kept a trading journal and I notated stuff. Oop. It didn't get there yet, guys. It missed it by 50 cents. I canceled that. We're not out of it yet. That's what that means. I was talking, and I thought I'd hit it. It came out in my trading journal because I actually documented how I was feeling in the trading journal, and it just dawned on me that that's what was occurring. I'm female, and we go through hormonal changes about 1 week out of the month, depending on who you talk to. And it's something that's very unique to women trader. Not in this scenario, Jim. I would not, because in this scenario, you need the discipline, okay? And if you allow yourself to exit early, then you're going to reinforce a bad behavior in the future. Okay? You don't have the ability yet to say, I know enough about my indicators and my charts that I need to exit this trade right now. Do you understand that, Jim? If it was an experienced trader that's really paying attention to the charts and the indicators and what they're telling him and all, what I would probably do in that scenario, I'm not focused on these two charts. I'm saying, look, you know, for whatever reason it seems to be holding right now. You know, I'm seeing divergence. It's going to make a magenta peak here. I could probably hold this and it will come back up to the ATR because it's a pattern that I know that typically develops. In which case, okay, instead of losing, let me get that back up. Oop. Instead of losing the 2650, I know that this is going to make a magenta peak because more than likely in the next 2 minutes you're going to have volume divergence that's going to push price up. I could probably get out with about a $15 loss. Now, I know that from experience. Okay? You don't have that experience yet. Do you understand that, Jim? This right now is all about discipline. Because you don't have the other skill set yet. And you need to build on discipline. And see, this is one of the things a lot of traders are, you know, they buy the indicators and then they want to trade just like I do, and that's great, and you can do it. You can achieve it. But you've got to be willing to learn the discipline, learn the indicators, and learn the charts. This is where, you know, at the seminars we go through a long discussion about, did you do everything right in your trade? Okay? Even if I come out with a loss on this trade, I did what I was supposed to do. I'm okay with that. It's just the markets. It's the way the markets are. Sometimes you win, sometimes you lose. Today was the loser. Okay, I did everything I needed to do. Good to go in the morning. Okay? I protected my account. I did what I was supposed to do. That's the reassurance that you get. Okay? Did you do what you were supposed to do? Okay? You can't control the price bars. You can't control the market. You can't control whether the market goes up or down. Okay? You don't control any of that. Don't mislead yourself, because you don't. But you do control your exits. You control your risk. You control your profit targets. Okay? Can you make them work for you? Well, I've already shown you can. Do you see how the divergence came up, Jim, on the 12-minute chart? The next thing should be a magenta peak on the 12-minute chart. That's experience. Right here, between this low and this low, do you see how the sellers decreased? Okay. Now, the next thing that's going to happen is that magenta peak is going to come in. Okay? And that's going to push price back up towards this ATR. Do you see that? That is experience. But, you know, it takes screen time to be able to do that. And you have to, you know, think about how many things you're trying to process all at one time. You're trying to control your risk. You're trying to control your losses. You're trying to read the volume on the charts. And on top of that, we have, you know, multiple time frames here. And then you're trying to analyze all of this very, very quickly. You know, it takes time to be able to do that. Just buying, you know, the THD indicator package is not going to give you that. That's what you bring to the table. You bring the discipline. You bring the practice. You bring doing the homework that Gail tells you to do. Okay? And you're not cheating me when you don't do it. You're cheating yourself. When I was learning price bars, I literally dreamed about price bars at night. And if I dreamed I was looking at price bars and I got the pattern incorrect that day, I would wake up and go check the chart again. I'm obsessive over it when I'm studying something. That's why I hate programming. When I start programming, I don't sleep. For days, I don't sleep. Because I'll run into some kind of problem that for some reason I just can't solve it. There's your magenta peak coming in. Okay. And then I can't sleep. Okay. Now, if you wanted to go one step further, Jim, on an experienced trader level, okay, this is after you've conquered the discipline part, I'm sitting here going, okay, it's pulled back to this ATR, but this ATR might prevent it from going up because there's no buyers stepping in. Do y'all see that? So I'm sitting here going, instead of taking $26.50, I might take a $14 loss on this because buyers are not coming in as it stands right now. Do y'all see that? That's experience, though. I can do that because I put in the time to do it. You can't do that. Not yet, because you don't have the discipline part down. While you're developing discipline is when you're learning your charts. Now, remember earlier I told y'all the 3-minute didn't override the 12-minute, right? Did I just contradict myself? That's right. No, I did not. Because what I'm anticipating, okay, is that this is going to go back to this ATR, correct? The next lower time frame is the 3-minute, okay? As they are approaching that ATR, the volume should be increasing, right? Is the volume increasing? No. I'm not saying the 3-minute is going to determine the market direction. Do y'all understand that? But what I am saying is in order for them to get to here, they cannot find resistance here, and they did because buyers are abandoning the market. See, I knew you was going to say that, Jim. Isn't the 3-minute noise? No, because I'm only doing this between the 3 and the 12, Jim. Earlier, and this is where sometimes you hear part of what I'm saying and you don't hear the other part, okay? This is one of those cases because earlier today we were looking up, 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 right? And this was up, okay? And then we said, do we think this little 3-minute here is going to determine the market direction? No, it will not. Now, the difference now is I'm trying to say, okay, are they going to make it up here to this ATR, okay? The buyers are not coming in strong. They very well might not. Could I exit this trade at $14, $15 of risk? Yes, because I'm only looking at 2 time frames, and I'm looking at this one to give me the heads up. And right now, the heads up is buyers are decreasing as it approaches the ATR. Did I say that where you could understand it, Jim? If I didn't, let me know and I'll repeat it in a different way. Okay. And this is, you know, one of the things that really, when I started trading multiple time frames, guys, it was so confusing to me. You know, you've heard that, well, the lower time frames don't dictate the market direction until they do. Well, when do they do? Okay. This to me is just giving me a heads up that buyers are not coming in strong. So if I wanted to exit with even less risk, I could actually do that because I've got the experience and the discipline to do it. In other words, I'm not exiting just because I'm afraid of losing money. I've got discipline already. But I also know that in order to get here, okay, it's got to flip this ATR, and buyers are not coming in. At this moment in time, I'm not seeing strong buyers movement. Do y'all see that? That's a different scenario. It very well could, Dan. But, and let's look at it realistically. Okay? Let's say that, all right, right now there's no buyers in the market. Okay? So they're going to test for sellers. They come back and they test for sellers. That's going to give you a bigger loss, isn't it? Okay, so, in that case, if you already have the discipline and all, why not just take the $14 loss? If it comes back and if it flips the ATR and test it again, then you would get your entry again. Do you understand that, Dan? But can you do that before you have discipline? No. Discipline is the first order of business. If I had exited at $14 of risk, that would have been based on a technical analysis reason. Okay, it's not something I'm talking myself into. Okay, does everybody understand the difference? It's not second guessing the entry or second guessing the exit. It is a valid reason that is supported by the chart. When do you get to that point? After you learn to read charts and the indicators? Not before. And that I can guarantee you. Yeah, you should be able to do that, Dan. You're right. Unfortunately, most traders cannot do that. And that's why I tell you to take your screen captures on exit so that you will actually see that. And then when you do take the screen captures, you need to be reviewing them. Okay? If you're just taking them and filing them away somewhere, it's not going to do you a lot of good. Hate to tell you that, but it's not going to do you a lot of good. Yeah, if you can't, you're letting no emotions trade the market, which is what you shouldn't do in the first place. Yeah, that is pretty flat. It usually means it's going to come back and test that low. You know, it's funny because Mika and I was talking about gold yesterday afternoon, and I'd already anticipated it would go back and retest that low, and then the magenta peak came in. And, well, it was kind of flat at that point when I was looking at it. And me and Mika were talking. I said, yeah, it's probably going to retest the low, but you could get a binary on that overnight for actually a decent price. What I call bargain shopping, Dan. And then it did go back and test the ATR on the, I think it missed it by 4 points on the 720 minute. That's what you did last night. Ah, you're learning, Mika. You're learning. See, we bargain shoppers, Mika. Well, binary trades, you have to be able to bargain shop and get them cheap, like around 20 or $30, because you're going to have to sleep, okay? So you put in your profit target, okay? What did you get in for it, Mika? 34, and what was your exit? Oop, didn't mean to do that. Shut. So you made 20 per contract at 54. Yeah. It's the markets, fam. What do you want me to say, honey? um, no, the binaries will be available. Like right now, you have the daily 450. I need to refresh. All right. Commodity binaries, you have gold. All right. You have a daily at 130, which is today, and then you have a weekly. Okay. If you're expecting this to occur overnight, you'll have to go into the weekly. And that moves slower, okay? But that benefits you because it moves slower against you as well. Well, the one thing that you really need to do and have for that is the scanner, because it really kind of highlights things like that, like we saw on the Canadian this morning. Now, what I do is kind of go midway between, and we'll bring over gold. Give me a minute here. I'm having to rearrange so many screens this morning. Gold. Alright, so this is where we were at yesterday, around 1275. Okay, that's where the market was when the market closed. Okay, so you have an ATR that's up here at 1296. You're looking for a strike price that is, somewhere in between this, with a very low risk. $34 is low risk, because if it expired above that area on a weekly, then you would make probably about almost three times what your risk was. Okay. But if you come in here, let's say at 1285, okay, the closer this gets to price, the more that you're making, and they're pretty safe trades. Do y'all understand that? And I would just about be willing to bet that if you did 34, then, wait a minute, let me come in here and do one contract. Hold on. I'll pull it over here. This is basically what Mika did, okay? Number of contracts would be 1. Now, his profit or loss, profit target would be 51. This isn't right then. C5 minus D5. No, I know why. I changed some of this yesterday. It would be, I got equal, 100 minus, no, that is your profit target. Yeah. $49. Is that right? No. Alright, let me do it this way because we're in the room and I can't do math evidently in the room. Actually, it would be 51 minus 34. It was 17 is, no, something is wrong on my spreadsheet. Hold on, guys. Oh, that's why I didn't copy the formula down. Haha. That would do it. Alright. So, in this case, his profit target should have been 59.5. Okay? And instead, he got 54. And this one, yeah, that one's right. I must not have copied all of my formulas down. Alright, so he should have gotten $25.50. He only got $20. Okay? And actually, that's not real bad at all. It's actually pretty good. Because I just about guarantee you it never went $17 against him. I gotta make sure I copy these formulas down, so give me a minute. That one doesn't have one. This one does. This one does. Okay, I can't do that one. Yep, yep, alright. Sometimes I forget to save my changes when I change a formula. Alright, I'm back. Yeah, I didn't think it would go higher when I looked at it this morning either. I really didn't. I would totally agree with you. But, and this is based on experience, because Mika has the experience to know it's probably not going to go any higher. I mean, within 4 points of the ATR, really? Now, what I wished is that they would open up, more times that gold is available for intraday and, even at nighttime, because it does move. I use these time frames for everything I trade. Okay? Everything. Let me bring this back up. Flip. Where is it? There it is. Now remember, we still haven't hit the 2650. Okay? We're still sitting here. Yeah, weekly expiration for next week would be good too. That's the point of it, Jim, is the discipline. Oh, yeah. There we go. Tell you, I hate working off of one screen. Drives me crazy. And this does take a lot of discipline. It's on the NASDAQ now, Chris. And remember, we were talking about over here where we had the volume divergence. I would have exited, and it was like around $14, right? And it's coming back to the ATR now. But you could have lost $4 less. Okay, yeah. But what's going to happen? The maximum it will do is go up here and touch this congestion dot and come back and touch the ATR here. Do y'all see that? That's what we anticipate, right? Because we have the congestion dot, right? So I still would have exited, and I would have waited and said, okay, this will come back. It will test the ATR, and I will get back in if the trade setup presents itself. Do y'all understand that? Yes, no, maybe. Yeah, it would be to the long side. Not with Nadex, it's not. I mean, it's $1.80 a contract round trip. Okay. Now with futures, yeah, it's $5 round trip, and that $5 round trip will kill you. If your average trade net profit is running $2, that commission's enough to kill you. Okay. I don't do a per trade argument on the binaries, and what typically will happen is, let's say that you open up a binary account with 2,000, divide it in half, only trade with 1,000. Now, depending on whether you're aggressive or whether you're conservative, if you're aggressive, you could risk 10% of the 1,000. That's aggressively. I would not recommend that for beginners. Conservatively, which is better for beginners, the most you can risk in any day is 5% of your trading account, which is like less than $125. Well, this is what the basis is, Jim, okay? It will come back to, it's up near the congestion dot. It's going to come back to the ATR at, right now the ATR is 40.66, okay? If it comes back to this ATR, that's where you're going to get your 50-50 range, okay? And if it does it on diverging volume, then you're in the money, okay? So as this goes up, you have the potential of getting the profit target. Do you understand that? On the binary side. Now, would I do a daily? No, I would go in a 2 hour on that one. Yeah, it should be right around 50-50. Right now, 40.65. If we look at that binary right now. And wrong one. Okay, we have noon and then we have a 1 p.m. Okay. So I would probably go in the 1 p.m. And it's not started yet, so you're going to have to give it a minute. Now this is presuming that it's already at the ATR. Okay. And you've had diverging volume and yada, yada, yada. Right. All of the other criteria is met. All right. We got 11 o'clock. Now they completed. Okay. So right now you cannot go into it because 40.66, 40.65 is the closest that you can get. Do you see how high that premium is? Now, you can do this. This is based strictly on probabilities, okay? But I would not recommend that for new traders. It's experienced traders that do that one. All right, we got 40.69, and it's at 63. Let it come down. As this comes down, this number decreases. Do you understand that? Do you see how you're getting volume divergence here? But you still have another 10 minutes, so this could go either way. Okay? But this is what I would be watching, just like I watched it down here. Okay? This would be the bounce down off of the ATR. Understand? All right, do you see how the ATR just pulled up a bit? It's now at 40.67, okay? The 40.69, that's probably the area I'm going to be watching to see if it goes to 50.50. Do you understand that, Jim? It's all about bargain shopping. And at the same time I'm watching that, I'm saying, okay, what is the ATR value up here? The ATR value up here is at 40.74. Okay, so I'm looking at 40.69, which is about here. Okay, so if I get in here, even if it gets up here, I'm probably going to be able to almost achieve that profit target, if not achieve it. But to do that, this price has to come down towards this ATR. And at the same time, if that's not complicated enough, at the same time you also have to watch the time, because we're looking at 1 p.m., okay? So if this, and we're coming up on lunchtime, right? So what I would also, yeah, they're already out of the way. We know that because the ATR, the only one that's above is the 12-minute right now. The other thing that you have to watch, we're coming up on the lunch hour, so we may need to watch this, and it may occur at, 1 o'clock this afternoon. Okay, I would be trading the 3 p.m. Do you understand? That's not available yet. I can't look at that one yet. But do you see how much thought goes into what I do? And for me, it's automatic, guys. Y'all have to develop that automation. You don't have it yet. No, AMP gives you live data, Artemin, if you have an account with AMP or a demo account with AMP, either one. You can get free data. Now, see how price is starting to come down? Watch this number come down. Okay? If price is coming down, this number will come down. That's what it's all about. Yeah, I thought Mirrors gave you, Mirrors with Ninja gave you free data, but it may be for a limited time too, Artemin. That's something I don't know. You see, now we're down at 59.50. We're back to 60. I mean, this number's constantly changing. It's like a blue light special. Yeah, most of the binaries can be traded 24 hours a day. Most of them. You may have to go out to a weekly like we do on gold sometimes, or crude. Unless you stay up to midnight. At midnight, the next day comes on, I believe it is. So, for example, at midnight last night, you could get gold with an expiration of 1:30 p.m. This is what I'm talking about. But I'm not sure if they do that on gold, though, because I've never been up at midnight. I know on the Forex pairs, if you're up at midnight, you can get the next days. But I think it's at midnight all of the next day binary expirations come up. Maybe one night I'll stay up to midnight and find out, but I could just call and ask Natives. That'd probably be the easier thing. Because me staying up to midnight just ain't gonna happen on a normal night anyway. I'm trying to think. I did a presentation on binaries. But no, the book will answer a lot of them, Artemin. But I don't have one particular video that answers all your questions. I'm in the process of doing some. I did do a binary spread in binary video that's available on the website. It's got quizzes at the end of it. But Nadex also has, for example, what's the expirations on all of the contracts and stuff. That's available on Nadex's site. And one thing I want to make clear, I know we're looking at the 40.69 range. Now, if that doesn't get down to, under $54, I'm not taking it. But number two, if I was actually in a negative trade, I would not even consider going into another trade on that. Do y'all understand that? It's called doubling down. No, don't do that. We don't do that. Okay? That is so against the rules, it is not funny. That's right. You manage one trade at a time, and you never add to a losing trade unless you just want to lose more money. I mean, if that's your aim, then yeah, you can do it, but I was explaining that only because I would have taken the $14 loss because of what the 3 minute was saying, and I would re-enter, remember that whole conversation there? Not because I would add to a losing position, okay? The exit at $14, Dan, it was based on experience. It wasn't for beginning traders. They don't have the experience to be able to do that. Doubling down, it doesn't work out mathematically. If you double your risk on a trade you're already in, you're doubling your risk in effect. It just doesn't make good sense. Mathematically, that makes absolutely no sense to me. But not on any one trade, Jim. In a day. Do you understand the difference? If you lose $100, and believe me, I come in under that if that's what I'm doing. Okay? That's maximum. It makes you very selective over what you're willing to trade. Yeah, this morning, just doing the trades that we have done, trading one contract, you pretty much would have had to have 5 trades to come in at that $100. Do you understand that, Jim? Yeah, I think, just managing one. Yeah, act like you have a small account and focus on building your career. Well, I did not anticipate on being in the room this long, but yeah, I think it's a great learning opportunity for everyone in the room. Both for money management, for discipline, for building your skills, you know. Well, thank you, Jim. I think it was a great session. It's one I think I needed to do. I haven't done one like this in a long time, so just the money management piece of it for a beginning trader. I've been working on that for a while because to me it just has to work out mathematically, you know. And believe it or not, and I'm just saying this to show you what it would do mathematically, okay? Which is, of course, the one thing that I actually look at, okay? Um, and let's take this one off because we didn't do that one. Okay, we did this one for 48. Now, I entered with 2 contracts by mistake, but I want to show you what would have happened if I had only done one. Okay, I would have only lost $24, right? On this one, if we achieve our profit target, would we be positive or negative for the day, guys? You're looking at 24 versus 39.75. We would be positive. That's math. Would it be a lot? And this is after commission. I actually have put the commissions in there. Wait a minute, did I? No, not in this one. I did on the other one. But at, $2 less than that, we would still be positive, okay? That's mathematics. Do you understand? That's where you're going in and you're saying, oh, it does work for you. If you just stick with the plan and have the discipline to trade the plan. At first, Jim, you have to have the discipline to do exactly what we're doing, okay? Which is you stay with it till one or the other is achieved. Now, even though I say that, let's fast forward and let's say that this is 3:30 in the afternoon and price, we said it's going to be greater than 40.72, right? And let's say that it's at 40.75, okay? And there's no chance of it coming down. I'll let it expire. But what if it's, right at that point, I'll exit. Do you understand that? That's something that's unique with the binaries. But and here's the reason, okay? And let me explain the reasoning behind it. We believe that this statement at 4:15 today will be true, okay? So price has got to be greater than 40.72 or we are going to lose the entire $53. Do you understand that? Now, let's fast forward and let's say it's 4:05 in the afternoon and price is at 40.73.5, okay? This will be positive more than likely at that point because you're so close to expiration. I would exit. I don't care what that number is. I would exit. Do you understand that now, Jim? Because if at 4:15 that popped down to 40.72, I've lost the full $53, and I don't want to do that. Not if I can help it, okay? Yeah, you're coming up, it's only got 15 minutes left, and you're right at the point of either you're going to make money or you're going to lose money, okay? Do y'all understand that now? Well, yeah, that's a good way to see it. It's nail-biting time, okay? And I don't want to risk losing the entire $53 because, and this is the key to it. Remember this spreadsheet this morning? I can only do that with 50 trades out of 300. So I'm very selective. If this goes against me $53, it's because it was sudden, it was violent, I had no control over it. Okay? It's not because I allowed it to do it. Do y'all understand that now? Is that phrased a little bit better for you? I will prevent that from going the full risk against me as much as I can. So if this is at 4:05 in the afternoon, even if it's showing a $2 profit and there's only 10 minutes left, I know if it's showing a $2 profit, it is right at the money, and it could go either way. I'm just going to scratch that trade. Right now, there's no reason to scratch it because it's 4 hours and 47 minutes left. Okay? There's a long time for that one. I could go eat lunch and come back, and it still probably wouldn't hit 26.50. Do y'all understand that? But right at expiration, these numbers can become violent. Now, let's say that instead of at 40.73.5, okay, let's say that it was 40.80, but we hadn't hit our profit target yet. I'll let it expire. Why? Because that is considered deep in the money. In other words, more likely than not, it's not going to drop 15 points in 10 minutes. Right, it's not going to come back. In that case, it would work out to my benefit. Now, normally, you've already taken your profit target. But there will be times where it didn't hit your profit target because, I mean, this one's way up there because it's at 93, okay? So this one might be deep in the money and still not be at 93, and it's still deep in the money. Okay, fine, stay with it. But it's got to really be deep in the money. It's not going to come back and bite you. Does that make sense now, guys? Yeah, they're really good decisions, in this case, this one's 53, but sometimes you'll get some that are 34 like Mika had, okay, on gold last night. All right, 34, well, it could have been deep in the money, and he knew it was going to close above there, okay. Normally, that's not at the U.S. opening. That was the difference with Mika, okay. You have a U.S. opening, and it's right up against an ATR. Come on, guys. Don't be stupid there. And that's why he said, now I'll go ahead and take my $20 a contract. That made more sense. Logically, it's a better decision. But do you have that experience or that discipline to do that? If you can't stick with a trade like I'm sticking with this trade today, no, you do not. And that's what this session is all about. Because I've already given you a winning recipe here. It's proven mathematically, okay? But you still won't stick with it because you're scared to lose money. You don't trade with scared money. All right, now do you see how this is at the money, 40.73? Over here it's 40.73.25. That's at the money. It's right at $56 to buy that. That's what I'm talking about, at the money. Okay? I actually like it 54 or less. Mathematically, that's when it works out. And if it comes down, and there's a magenta peak that's probably going to come in, if it comes down, that's when you get it for under the $54. See, now it's down to 52. The further the price comes down, the more that comes down. That's what you want. And I know I'm talking about two different trade setups here, and I think y'all can follow it, you know. That's based on I'm not in this position. I had already exited. Would I look to re-enter if another entry was generated? That's what we're talking about there. It's not because I'm doubling down, okay? What would you need to see here on the 3-minute chart? You would need to see diverging volume on the approach to the ATR, right? Yeah, right now you're right up against that, but it's on increasing volume as it stands right now. That ends in another 4 minutes, so you would have to evaluate that, Jim. And a lot of times you can't wait because you're right here and you're trying to get in with a low risk, okay? Do you understand that, Jim? Okay. This, to me, shows a true auction process, you know. You could picture the auctioneer going, I hear 50, do I hear 50, do I hear 51, do I hear 52? And if he doesn't, it goes down. See, it went down to 49, okay? That's the true auction process between these numbers. I love it. See, he didn't hear anybody at 50, so now it went down to 47.50, 47.50, 46, 46, 46. If you can picture that in your head, that's really what's going. Can you take it now? Okay, no, you've got increasing volume to the downside. That's intra-bar. You still have to keep your eye on this, you know, as it's building. And of course, I love auctions, so to me it's easy to see that. Never. I hate Stories Wars. My daughter used to watch that, and she got me into it, George. I said, oh my God, they come out with some of the stupidest programs now. My granddaddy used to take me to auctions. I guess that's why I love them. We'd go every Friday night, started at 7 o'clock. And my sister can talk that fast, believe it or not. I can't, but she can. Okay. Evidently, they're not. I hate reality TV. And see, now it's, okay, 41, 41, 41, 43, 43. Oh, we're getting divergence. Oh, we're getting divergence. We don't do that. We're just watching it, okay? And again, I would have to be out of this trade before I could go in, okay? No, it's not different at all, Dan, as long as you're paying attention to, only risking 50%. Now, again, watch the expirations, okay? Which is something I'm always going to be doing, okay? Now, just to give you an example, this one expires at 1 p.m., okay? That's an hour, almost an hour and a half away, all right? Let's say that we were not in here. You could get this one for 40.50, okay? Now, if you did that one, and you wouldn't be able to be in this one with a negative trade to do this, I'm just showing you. In that case, your risk would be $20.25, and you would put in your profit target. I would average that out to 71. Okay, again, it would be one contract, so your profit target would be, your profit on it would be $30.38, basically. Okay, it's going to work out the same. But let's say that you did take that, and let's say that it's at 115, okay, and price is at 40.73.25, okay, and you had 15 minutes left before expiration, I would probably exit that trade, because you're not deep in the money and your profit target has not been hit, and your risk has not been hit, okay? Yeah, that was the day I went to the dentist. I had a magenta peak on the 1440, so it moved in your favor. You could have had 3 or 4 other trades off the ATR in the 3-minute. Yeah, the other one, and this is just something I'm going to show you. It was on gold. And remember yesterday I told everybody that watch out. I said it's a heads up. You had an 80x value right here. Okay? Now, let me show you overnight, if you've been trading overnight, okay? This is what it looked like, okay? So you had trades in here, you had trades in here. Seems like there was another one, yeah. Yeah, it was 3 trade setups. Here, you had here, and you had here. The problem with gold is overnight, you really have to trade the weekly, okay? The 130 expiration wouldn't come in until after midnight, okay? But and this is what one of the reasons I'm trading Forex so much. Forex is available just about 24 hours a day. There's always an expiration, okay? So when you see these magenta peaks coming in on a higher time frame, even if it's during Asia, you could actually go in and trade closer expirations. Do y'all understand that? And there are times when I do, yeah, on Forex, there are times when I will get 3, 4, 5, 6, 7 trade setups. Because, and this is a thing, you have to gain the experience first, guys, okay? But it's like this morning, you know, we had the potential of having 4 or 5 trades because we thought the market was going to go up. Do y'all understand? We had a bias to the upside. We could have done 4 or 5 trades. Should you do that as a beginner? No. Can you do it when you gain experience? Yes. Right. And that's usually the DAX, actually. The DAX moves more than any of the other U.S. indices. And it does move 24 hours a day like the NASDAQ as well. Well, technically they do close, but y'all know what I mean. All right, guys, I was hoping we would get stopped out, but it's just going to drag on. So I need my nap because I'm running out of steam this morning. George, are you going to be around this afternoon? I seriously need a nap. It's like my eyes are closing on me. Oh, thank you, Dan. Five works for me fine. Yeah, it really is. All right, everybody have a wonderful day, and I'll get this produced sometime between today and tomorrow, okay? All right, everyone have a wonderful day, and I'll see you tomorrow, same time, same place.